Alrighty, traders, hold on. I'm just posting the link in our chat box, and I'll be starting. Okay, hey, I got to show you guys something. I don't actually need to know this.
We've seen you naked.
Huh? No,
We've seen you naked.
There's some of you guys are not in the chat room, so I want to show you guys something. Earlier, Steve, this is kind of funny. Let's go back early. Oh yeah, here we go. Okay. This is what, 3 hours ago, 2 hours ago. I go right here. Okay. Dollar Mexican peso, head and shoulder pattern, hourly. I said, and this is at 5:02, so this is two hours ago. I said, if I tweet it, maybe I can make it go up. Why? I'm long. So, I'm like, I know for a fact there are certain algorithms that are queued into my tweets, and they have been for years. So when I get into like kind of illiquid currencies, like I don't think my tweets can do so much when you're when I'm tweeting about like the euro dollar. But I know that there are like I'll give you an example. Back in one of the guys that I trade with, he was telling me about, there's a annual conference about peso traders that happens every year, and he's like, it's not a really big group of the head peso traders for most banks, and you get a couple of those guys queued on to me in a illiquid currency. I can actually make a difference, I think. And I'm like, well, I'm gonna make it go up. And then we're talking about it, and I said, look, it's as
so you're officially admitting of being a market manipulator, right?
Yeah, well, I mean, I'm not the guy pulling the levers here, so it's not really me. But I go here. Look, my tweet did that, and now we're actually breaking higher in the dollar mex, and I am long, and most people know that I'm long, so that's not a secret, especially you guys. But it was funny, to say the least, and I do actually think that the dollar Mexican peso is on track to actually break higher. But that was just kind of, oh, did I just make that disappear? Hold on really quick. Did I just kill the chat room? I just killed the chat room. I didn't mean to do that. I killed my link to the chat room anyway. Yeah, so for those of you guys, you want to see how busy it is this morning. It's we're pretty busy chatting it up. But yesterday was kind of slow. So anyway, all right. What I do want to talk about though is I want to talk about let's build the bias chart here. And hey, Steve, I don't know if you heard it yesterday. I told everybody, look, this is going to be the edge chart, or the morning edge, guys. So when you guys are listing in every day, and this is just going to enhance you, all right? Back in the day, and I'm going to say this again for those of you that missed it yesterday. Back in the day, 10 years, whatever ago, I did the morning edge, and it was long standing, to like 12 years of daily broadcast, same time, and people loved it, not only for the bias chart, or we used to call it the T chart at the time, but it was basically a bias chart. We used to really just talk about what's kind of moving the markets, and what we think, like what's like, I'd rant a lot. I'd usually have some sort of rant for the day, and that's kind of what what this is all about.
And on occasion you did interviews as well. People might not know that.
Yeah, and that's more the face, but face webinar, but really for you guys, I want to give you guys more, not just myself, but Steve as well, more of a personalized experience for those of you that are, you know, supporters of ForexAnalytix. You're in the family. Look, you're going to get something extra special. We're doing the bias chart only for you, and you know, periodically we'll do it from time to time for the broader audience, just to kind of give them a clue of what, you know, what we do behind the scenes. But also I want to, you know, be able to talk more openly with you guys about, you know, Steve actually liking men, not so much.
Yes,
I mean,
mostly.
just kidding. But no, I'm joking. But no, mostly about like how I'm feeling about the markets and giving more of a personalized, you know, this is how I feel right at this moment in time. Whether right or wrong, it's just, you know, my 2 cents. And Steve's going to be, and Stelios will give you the same, even though Stelios is not here today. But let's get through the bias chart. I'm gonna go through the charts right now. Let's start. Well, since I got the dollar Mexican peso on here, let's talk about the fact that we are, you know, again, probing this multi-month trend line. This is a big resistance. And as I wrote yesterday in the ForexAnalytix basic technical analysis, if you guys don't read this at night, these are my thoughts at night. We could not close above the channel resistance, which means that the 2032 level would have to be a close above to turn bullish towards the 2070 level. So this is really important resistance because this is the 618 retracement. We do need a daily close above this. I think if we get a daily close above this 2032, that's going to be huge. So I'm not going to mark that up today for the bias chart. I'm going to mark up the overnight or the highs from yesterday, which is 2038. Okay. But you guys, now that you're here, and you've heard me, you kind of know what's important. So 2038, that's going to be pretty key. Supports are going to, you know, obviously we're holding at 2014 roughly. I mean, the lows here today is 2014.45, so I'm going to just write 2014. That is support. We are threatening to go bullish on a you know, on a close today above 2032. That will turn bullish tomorrow if we do it. I'm not saying that we are going to do it. It's just if we can do it. The euro dollar. This is kind of following what we thought yesterday is a complex inverted head and shoulder pattern. It is a diagonal or slanted, you know, neckline. That means that the shoulders will be a little cockeyed as well. So as long as the euro holds above 120, this 120, what's the spike low here? 120.23. And I would obviously just give it down to 120. I think it's, you know, there's a risk that it can still break higher. But if stocks roll over here, I mean, look at the NASDAQ, look at Apple, right? David, if you got to go, yes, we record these. Steve records these every day. So Steve, where do you post them? You post them on the YouTube channel?
They're not public in the YouTube channel for a day because they're only for clients. But I send the link. Yeah, they are posted on YouTube, but not as public, so they can't like go to the YouTube channel and see them. But we post a link in bell notifications, so they can access it.
In the bell notifications right here, here's the
yeah, there you go.
Like this is 21 hours ago. You see this bell notification. You can actually access the recording right there, and so you'll see that in about 20 in about 2 or 3 hours. David, did you hear me? I know you're leaving, so maybe he left. He might have left already. Dang it. Well, anyway, you guys all know where it's at. Okay. Thanks, Steve. So let's mark up 120 resistance. Actually, see this previous support. That's probably going to give us a little bit of a trouble today on a rally back, which would be 121.20. But I am going to mark up 121.65. And look, I don't I don't think there's anything to do with the euro right now, honestly. But 120 is support, resistance, 121.60. We're in a range. Okay. Cable, 140. Big resistance. It's the big 161. You guys should have just got the update. 161% extension of this move. I'm bullish sterling. I am. I'm, not necessarily bullish the pound dollar right here. I'd rather buy it on dips, but I think 140 is going to be a big deal today. And as you guys know, this has been consistently bullish. So, but I think this is going to be key. Today, I would think today, I almost would say any dip back dip right to here. You can see that little hourly breakout point. I would say any move back to 138.80 is probably going to find support for the day. Right? Aussie, damn Aussies, just squeezed after the employment report. I say damn Aussie because I'm long pound Aussie. I'm long some euro Aussie, which is not acting too super well, but I'm still more bearish the Aussie dollar. I like the fact that we just didn't hit new highs, and so this resistance is going to be key. 77.90. 77 cents of support, or actually today would be 77.25. I still think it's range bound. Overall, it's funny. I keep reading all this stuff about commodity super cycle crap, whatever. Like, yeah, that's great. You guys are, you're writing that now as analysts, and I keep reading these research reports like commodity super cycle. Great. So where were you when the Aussie was at 60 cents? I agree with the analysis that we are going to have inflation, and you probably want to be commodity buyers on dips. I just don't see right now the risk reward to be long Aussies at this point. I'd really like to be long Aussies down at maybe the 200-day moving average, maybe 70 cents. I think I'd give it a whack a couple times down here, depending on, if we got down there, but buying it up here, this doesn't make a lot of sense on me based on what equities have done and where, equities, might be in the ready to pull back here. So making lower highs is good. But currently support is at 77.25. Then after that, 77 cents. I don't think we'll see that today. I'd be very surprised if we saw 77 cents today. Kiwi, is similar to Aussie. You can see how this false breakout here, I think, is kind of important. Okay. But I think this trend line here is important. Let me get rid of this. So we had a false breakout. Okay. So that's 72.70. 72.20. I don't know if that's going to cap it. Let's see. Okay, so the 618 is at 77.25. So it's actually 77.26, but or 72.25. Let's mark that up as resistance, even though that's the high. We can get a little higher. Support is at 71.60. We wrote down 71.30 yesterday, just in case. Oh, because I wrote that down just in case we stretched a little further. So 21.60 should be good support today. 71.60 on dips. Sorry, I'm just kind of looking around really quick. Okay, because equity is just open. Oh, dollar Canadian. Okay, so dollar Canadian, very similar to the dollar Mex, and setting up a nice head and shoulder pattern. But that means that this right here is really support. This actually, what I think is more likely at this stage is this. So what I'm going to do is I'm going to put a alarm right here, just in case we start breaking. That would mean that 127.45 is big resistance. And if that breaks, insta bullish. What did I say? 120. What? 127.45. Okay. We're range bound. Support right now is today's low because that's going to match yesterday's low. So 126.60. Okay. Moving right along. Dollar Swiss. I'm actually considering buying dollar Swiss, and I haven't said that in a long time, guys. I have not said that in a long time. I'm really considering buying some dollar Swiss if we can get above this trend line here. So that would be 90 cents. Hold on. 90.10. That's it. We turn that, we break that. I'm going bullish. Support 89.40. I think we wrote that down yesterday too. With yields ripping, I think that's it's at risk of moving higher. You know, I really do. I think people underestimate the dollar when you start to see the yields rally the way that they're rallying. US dollar, Norwegian krona, inverted head and shoulder pattern, complex neckline being here at 855, which is going to be that spike high support, 845. You guys should, if you got the basic technical analysis this morning, you guys already knew that. And remember, when I get up in the morning, I'm going to comb through some of these, currencies. I don't catch them all, obviously, because I'm trying to also tend to trades and everything else. But, I try to pull up things that I think that look interesting to me. And so like this morning's analysis, you already kind of knew it was there and where the supports were, right? From this morning. So just when you see your analysis pop up and you see fresh analysis, read it. I know it's a lot of you guys are like, hey, but it's like, no, just read it. So you can kind of get my thoughts and ideas here, and not just me, but the rest of the team too. Amanda posts her key support and resistance levels on a lot of currencies as she comes in the morning in Europe. So dollar yen, this is another one that's, I have a hard time reconciling buying dollar yen, but that's my own issue. That's not anybody else's issue. But the dollar yen actually looks bullish. I mean, it does. And we were kind of setting up a dollar or a double top yesterday, but man, I don't know, man, this rally in yields could really, push up the dollar yen. So support, let's figure out where that's at. Let's figure out where like a 38% retracement is. Be right here. So I'm going to say 105.50, resistance 106.20. Oops. Clicked the wrong thing. Okay. And I'm going to have to still put it at bullish. You know, it's still acting pretty well. Dollar index. What a mess. What a freaking mess. The good news is, let me get rid of this. You can see that we are respecting 618s, right? Hey, that's the good news. That makes it important from simply just understanding that we know exactly where support and resistance levels are at. So, you know, you can see right here, right? 618 held, 618 of this move held. So we know exactly where the sandbox is. That means you do one of two things. You play in the sandbox or you wait for the sandbox, wait to get out of the sandbox, right? Ja? Da. Da is good. Da is good.
Jawohl, Herr Kommandant.
Okay, whatever you say. 9105, 9013. I'll just write 9010 just to do it. 9105, 9010. Oops. Okay, we're in a range there. Gold. I'll stop at the S&P. S&P, head and shoulder pattern. I know I was talking about this on the face webinar. We don't have to have a perfectly symmetrical head and shoulder pattern. That doesn't mean that you know we won't build one. Maybe this builds out for the next week, but I still must say that we have to pay really close attention to the 3870. But for now, I think 3890 and then 3870. So I'll write them both. 3870, which is key. 3890. Then resistance is back up here at 3940. So, I'm going to just kind of put this in the context here. I think if we break, this support here roughly, which is 3890, that will give us a retest of this support. Whether we break this support or not is to be seen. But I think a break below here will allow us to retest, right? That's what I think. So, considering we're above 3,900, there's still a lot of work to do. Georgie said, Blake reminded me of the German movies from my childhood. Das good.
Speaking of which,
I'm so opposite German, Steve.
Speaking of which, Das Boot is a very nice movie, actually. I don't know if you've seen it, the one with the submarines in World War II.
No.
It's a very good one.
No,
you should see it.
I'm a big fan of a lot of things. German women, blonde German women, German watches.
German women are actually kind of weird. They come in two sizes only. Thin and tall is one, and huge is the second one. For some reason, you don't find in between.
Really?
Yeah,
that's interesting. I just think I'm obviously married a blonde, and I think I've dated like probably a handful of brunettes in my life, or ethnic or non.
Hopefully, all of them pre-Lisa.
Right. Well, this is obviously just my wife, right? Of course. So anyway, yeah. So I'll shut up now. All right. So gold is heavy, and you notice we're failing at the breakdown point. So I'm going to write down the overnight highs as being important, which is 1790. I do believe gold's bearish. Oops. I do believe we are going to break this support, and then it's going to get ugly. 1765.
Yes, Ron, that movie, Das Boot, it's excellent indeed.
Hey, Ron, we miss you. That's Callum in the chat room. Good to see you. Hope Hawaii's treating you well. Silver. So, not a lot to do with silver, but I'm afraid if we break this support, it could, you could see some selling accelerate. I'm not necessarily there that's going to happen, but I mean, with gold continues to drive, oh, stocks are moving lower. Dow just breaking down here. I just feel that, with with gold breaking lower, silver is going to make a move soon. So 2670, I'm going to write that down, and then 26. So just 26, 2670, and then obviously resistance is at 28. So, and then last but not least, and then I'll let Steve take over. But I just want to, I want to cover just a couple things. Bitcoin, while we're above 50K, I mean, it's just bid. I mean, I'm going to just start looking at 50,000 is support. And we just have to start looking at 55,000. I mean, I'll mark up 52.7, but doesn't really matter much. I would just do this. Just look for every 5,000 increment. We'll probably find some.
Yeah, it's the weird uh, point you find yourself on occasion with instruments like that.
Yeah.
That there is actually no resistance because they're at all-time highs. They've gone parabolic, so now you've exhausted all meaningful fib extensions. So it's like, who knows, just find round
Right.
numbers.
Right. So I just saved the bias chart. I'm going to upload that to our system so you guys have it in right here. Since Stelios is out, I'm going to just upload it here. And let me see. Not a lot of difference from yesterday to today, but there's some differences there. What was I going to say? Really keep an eye, in my opinion, if we're watching here, just watch Apple, man. Because let's just think about this really quick. This is a 4-hour chart, right? Okay, there, your neckline really is right here. So if this, if this move get some legs, let's just talk about what possible repercussions here.
By the way, Blake, if you look at the daily chart of Apple, since you mentioned it, it is extremely interesting because, believe it or not, Apple on the daily is diverging since January of 2020. So it's a year now that every high is a lower high in the RSI.
Well, let's just think about and I it's crazy, right? Because it's just divergent, but it doesn't really matter. I mean, divergent just,
Until it
what does
does.
that do? Yeah, and it does, yeah, it doesn't matter until it does, right? And we are through support, and if we correct here, that is a 25% correction, and you could argue, or no, I'm sorry, from the top, yeah, from the top it'd be a 25% correction. From current levels, it would be a 16% correction. So and then you could argue, well, Apple's not the entire market. I agree with that, but it's going to have a lot of influence. So,
Yeah, it's
a
one of the
16%
leaders.
correction in Apple might translate to an 8 to 10% correction in equities on the broad markets, even if you're, getting out of some Apple and diversifying into, some other technology space or whatever. or even as some cyclicals or what have you. So I mean, that's a pretty big correction for the biggest company in the world, and that's going to have an impact, in my opinion. So I think we just have to keep an eye on the possibilities and the risks here over the next couple of months. And like I said, the move in Apple is not something to not really care about. I think it's going to start to influence. You're seeing it today. You're seeing how it's weighing on markets right now. So anyway, just some food for thought. Steve, I'm going to turn it over to you. Thanks everybody for always tuning in. I'm going to upload that new bias chart, and have a great day.
Thank you, mate.
Thanks, Steve. Thanks everyone.
Okay.
And don't forget, Steve posts the recordings on the bell notifications.
Yes. Always, for the daily roundup as well, always.
Yeah, and that's important to know, because if you're sitting there waiting,
and the European crossover,
all of our webinars that we do, Steve puts them on the bell notifications. You can get them from the YouTube channel. Private videos like this, you're gonna have to wait like almost 24 hours. But if you use the bell notification on ForexAnalytix, you can access it within Steve will have them done in a few hours. So
yeah,
okay. Thanks,
exactly.
Guys.
Okay, so yeah, Ron, it is indeed that movie. It's Peterson movie, if I remember right. IMDb Das Boot. There you go. Yeah. Am I right about? Yeah, Wolfgang Peterson. I was right. Yeah. So yeah, 8.3. From what you know, it's not easy for a movie to get 8.3. So yeah, for those of you that like those movies, war movies, etc., it's a very, very, very good one. Okay, so what do we have today? The market still remains somewhat under pressure. As I said yesterday, though, what's the previous high at 38.68 until we break that? I mean, no real enthusiasm. And in the case of Nasdaq, I think important to watch is this ascending trend line support, because if this is indeed the beginning of like a bear reversal, then that's an ascending wedge. And if we do break the ascending wedge, the implied target would be all the way down to 10,850, by the way. So that's what I think about that. Blake already showed Apple. Now, if we look at the FANG index, which includes the rest of them as well, unfortunately, there is still no real indication. I mean, Apple might be somewhat weaker, but other of the FANG stocks obviously compensate, because as you see, for the time being, the FANG index seems to be consolidating, and usually these type of consolidations in big bull markets are continuation consolidation. So Apple might be showing weakness, but the FANG index so far does not confirm that, and I wanted to mention it. What is important, though, is that the VIX is still rebounding higher, having left the opening day of the week, the daily close, which was a multi-year daily close, as a false breakdown for the time being. So I think we crossed through 25, which is a previous support resistance area, and things start getting real here. From those of you that have some experience, that the VIX can have some massive days, right? For example, look at that day high, right? I mean, we can slice through 25 like it's nobody's business. So what's our 25? I think we sliced through 25 and we're headed towards quite a big spike here. Now, the DAX might have stalled for the time being, but also no real technical damage yet. You can clearly see that. Same thing with the FTSE. Somebody can make a very good argument that it has broken through this ascending wedge, and this might be a good risk-reward opportunity for at least one more leg lower, right? There is also the argument to be made that if indeed we are to see a bigger correction lower, this might be a very nice head and shoulder reversal, right? I think you can see it now. Shoulder, head, shoulder, right? So that is something to pay. So this trend line support in essence is one to keep your eyes on. Now, enough with the indices. We more or less understand what's happening here. I mean, there is the potential for a reversal. Let's see what happens from there. DXY found resistance at 91, and so far today it's been having a negative day. Now, the S&P is down, dollar is down as well. Something has to give. I'm not saying that it's impossible to have a day that both of them will be lower, but I'm saying it's not very likely. So now the question is, which of the two do you trust that's going to reverse by the end of the day, the dollar or the stock market? To be frank, from past recent experience, the stock market is more likely to turn higher, knowing the forces, the invisible hands that affect it. But if you do see the DXY reversing higher, it's already paring back some of its losses. I think you should see an acceleration lower in stocks. And as I've said before, the S&P is the barometer for risk. The first serious support is like at 38.68, 38.70. That's going to be the first milestone. We go through that, and I think that things start becoming more serious. Now, what keeps me somewhat skeptical is the fact that commodity currencies don't seem to care yet. Here's the Kiwi, so far in what looks like a symmetrical triangle. Here is the Aussie, so far in what looks like a flat top triangle. Actually symmetrical triangle, because the resistance is slightly inclined to the downside. Close to resistance, actually. I mean, commodity currencies don't really seem to be, buying this for the time being. Now, crude oil, you remember that we talked about crude oil yesterday. Guess what? It reversed higher, and it had a day higher irrespective of the weakness in indices. Not very, very, very usual, but it has now reached this resistance area, right? And it does once again, like yesterday, seem to be trying to put some type of a reversal. So we are at channel resistance. We almost reached the next upside target. It can't keep diverging for too long, meaning if the S&P doesn't catch a bid, I think this is an exceptional good risk reward area for somebody to try to fade crude oil, right? Natural gas and inside black candle today, but nothing has really changed. Gold was positive on the day, has now turned negative. I think it has a very good likelihood to actually, come down and produce a lower low, as we said before. Once again, silver holding up much, much better, and that's something to note. And platinum holding up quite nicely as well. I mean, it might have another leg lower, but I think that the path of least resistance remains to the upside. Another one that still is diverging is copper. Copper actually testing this ascending wedge trend line resistance as we speak. I don't think it can keep diverging for much longer. So either the indices prove that this move lower was just a small correction and they keep on pushing higher, in which case not only we might see copper break through this wedge, but actually if it does that, I think it has a very decent chance to accelerate higher and produce even a vertical move to the upside, which probably is going to be terminal before a deeper correction because it's already overdone. So, kind of a moment of truth. And the same thing applies with nickel. Nickel back testing again. This channel trend line resistance. Just look at this move from the March lows at 820, almost at 1400, right? Commodities are not joking. I mean, they're just going, non-stop. A lot of people really want to buy them, but they don't produce any type of, pullbacks to actually give the opportunity. Now, having to do with the FX market, because I keep an eye on it on a daily basis. One pair that I pay a lot of importance to is this one, the USD Chinese yuan. One of the reasons is because it's been in one of its biggest and most prolonged downtrends in years, right? Very well behaved, channeled, as you see here. And yesterday we closed at resistance. Today we're trying to break through it. Now, combine that with this RSI divergence, which is a reliable one, meaning previous low here below the 30 line, this low here above the 30 line quite comfortably, roughly at 34, 35. I think this might be an interesting breakout with several implications for several markets. So I'm really looking forward to seeing how we're going to close the day here. Are we going to manage finally? I mean, we've been in a downtrend since May of 2020. Are we finally going to manage to close above it? I'm paying close attention to that as well. I think that's going to be an interesting technical development in a market that's been going only in one direction for what is it now? 9 months, 10 months, something like that. The same I see in coins, not offering any interest. Yes, very right. Speaking of which, I'm still of the same opinion I was yesterday. Be careful here. We have an overthrow in this ascending wedge. The ascending wedge here might be a little bit different, might be something like this. I think it's a matter of time to see a sharp correction lower in these as well. I mean, they can't really go much more vertical than they've already done. So, the positive news keep coming, and I think more or less we've exhausted them. And I think that there won't be any buyers to be found at these prices anymore before seeing a pullback. So inevitably, we have to see a sharp correction lower. And why am I saying sharp? Because usually corrections are, in analogy to the move, to the moves you've seen prior in the direction of the trend. So we've seen parabolic moves to the upside. So you can easily expect sharp moves lower, right? So yeah, I don't think you should even consider chasing them up here. I mean, it's insane, and there is definitely zero risk reward ratio to do so. However, from 4 hour downwards, it does not look parabolic anymore. Yeah, okay. Momentum seems to be waning a little bit, yes. Oh, I didn't know that actually. And famous German singer Herbert Grönemeyer is on one of his rare appearances. Which character did he play? Actually, because I remember the movie, I've seen it a lot of times. Which of the characters did he play? The second in command. Okay. So, any questions? I mean, more or less, I think I covered those things that I had in my mind as like quite important for us to visit. So, Oh, wait a second. Oh, it's Thursday. Yeah, we have to wrap it up. Leandro has to start the oh, I completely forgot, sorry. Leandro has to start the Spanish webinar. Having to do with Platinum Mate, nothing has changed. 1175 is support. Palladium also, nothing has changed, long-term consolidation. Okay, so see you all tomorrow. Bye-bye.